Hello and welcome. You're watching The Money Show. I'm Kavita Thapliyal and this show is a one-stop destination for your personal finance queries. And today again on the show, we'll be focusing on the tax part of it because the deadline of 31st March is almost around the corner. So in this scenario, what should be done in order to get your finances right, your investments right? We'll be guiding you with our experts and we will also answer your portfolio queries just in case you want to do your life financial planning with us or need our experts for any financial or investment strategy. You can send across your questions on 865-797-4571. We also have an email ID which is themoneyshow@etnow.tv. So do send across all your questions. Okay, so let's begin. Now, as the financial year comes to a close on March 31st, it's time to ensure you've ticked off all the important tax-related tasks that can help you save money, avoid penalties, and plan for the year ahead. Whether you're an individual taxpayer or a business owner, taking a few strategic actions now can make a big difference. Today, we are going to focus on critical tax steps you should take before the deadline, things like investment planning and tax-saving options, finalizing your returns, and more. So if you haven't already, grab a pen and paper because these last minutes action could save you a big in the long run. I have with me Arnav Pandya, founder Money Edu School. Arnav, good evening and welcome to the show. We'll be talking about tax loss harvesting now. It's a strategy used by investors to offset gains by selling securities at a loss. Now, when we talk about actually implementing it and taking the benefit of it, could you please explain how, in terms of tax saving, we can use the strategy of tax harvesting?
So when it comes to capital gains,
Okay.
there is a situation where during the year an individual will have different forms of capital gains and even some capital loss. So ultimately, at the end of the day, whenever an individual is going to file their tax returns, what they are going to do is pay tax on the figure after all the internal adjustments are made. And this is where the entire concept of tax loss harvesting comes in. Now, just to give you a reference point for this year is actually one where individuals can easily implement this also because of the fact that you saw that during the first 6 months of the financial year, there was upward movement in the Indian equity markets. So there are quite a bit of gains which investors have accumulated from that point of time. But after October, you've seen a slide. And so there will be also a lot of cases where there is red in the various investments. So this kind of strategically ensuring that some gains are set off against losses which are actually booked is important because it will ultimately help you bring down the tax liability. Now, one important factor here is the clarity in terms of what can be set off against what. So when it comes to capital gains, there are long-term capital gains and short-term capital gains. So similarly, there is a long-term capital loss and a short-term capital loss. Now, a long-term capital loss can be set off only against a long-term capital gain, while a short-term capital loss can be set off against a short-term capital loss as well as a long-term capital gain. Okay, so that is very important that your long-term capital loss set off is restricted, while short-term capital loss can be set off against either of the gains.
Right. Interesting. Now, what are the kind of investment one should actually determine, when we're talking about tax loss harvesting? Is it purely based on tax advantage that we should be taking this particular call, or are there other factors? And keeping the long-term performance in mind, how does all of that come into play?
So the point here is that what an individual is doing is actually selling off some investments on which they are witnessing a loss in their books. And so instead of just keeping those specific losses on just as a way of figure, they are actually booking it and bringing it into their books of accounts. Now, later on, they can even buy back the same shares so that their long-term planning or having those particular investments remain in place. So it's not just a question of changing their plans, but this is just strategically booking some losses so that in this particular financial year, you are minimizing your tax liability. The question is that whenever this kind of sale is to be made and a decision has to be made, the investor also needs to look at various other factors, whether what is the relevance of their investment in their portfolio, whether this is actually something which they need to sell, whether this kind of loss is temporary or will it be recovered. All those factors will help in for helping them formulate a long-term strategy also of what they want to do going ahead. So these factors also need to be a part of the decision-making process.
We're also talking about ETFs and mutual fund investments, or we are talking about specifically individual stocks?
No, here everything comes into play because even ETFs or even your various mutual funds also you will have both equity as well as debt mutual funds. Sometimes what happens is that in mutual funds where you have a long-term debt fund and this was purchased way back, there you also had the benefit of indexation. So if that is also there, then you might actually have a loss there, which you can set off against some other gain. All these investments are there. It's not just a question of equity shares, though given the current market conditions, it is more likely that you will be able to do this kind of set off more with various equity related instruments, including mutual funds.
All right, I think with that, it's a wrap on this particular segment, Taxing Times. Thank you so much, Arnav, for being on the show and helping our viewers understand the strategies behind tax harvesting. Thank you. We'll take a quick break, and post that I'll be joined by Pankaj Matpal, who will be answering your mutual fund portfolio queries. Just in case you want to send across your questions, you can do that on our WhatsApp number, and you can also email us your questions. The WhatsApp number is 865-797-4571, and email ID is themoneyshow@etnow.tv. Anything related to tax also, if you want to ask, you can send across your questions and we'll get answered by our experts.